We are back to wrap up a wild week in the markets. Nvidia continuing to go absolutely crazy. But you know what, folks? Today, it's Tinfoil Fridays. Get your tinfoil hats on. Kevin is going to be coming at you with some conspiracy theories. I can't wait to hear all about it. That and much more today on Money Never Sleeps. Thanks for joining us today. Before we get going, do us a favor, hit that like button, subscribe to the channel. Nothing Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kev, I'm fighting through it here. The kiddos got croup. My wife and I are both feeling some of the after effects, but you know what? We got to fight on. We got to persevere. We got to be here to close out the week in the markets because we weren't here yesterday to discuss a crazy Thursday. Nvidia having the single biggest day in the history of the stock market. Yours truly took that as an opportunity to trim my Nvidia holdings by a very significant amount. So I'm feeling good about that. Whether it continues to go up or not doesn't matter. I've that odds are I will never have a better ROI than what I've had with Nvidia. So I am happy. I'm feeling good. How are you feeling on this lovely Friday?
I'm absolutely happy for you, man. If you don't bleed, you don't deserve any of the glory. You sat through that for a long time. So great decision, I think, just personally cutting some of that off the top. Because I do think that there's a lot of people that aren't going to do that, right? I think a lot of people are very in the mindset right now that, oh, it's just going to keep going up. We're only year 1, year 2 of the bubble. Some bubbles last 5 to 6 years. That's also known as greed, right? You're just hoping that it keeps going up. Hope doesn't get you where you want to go sometimes. So I'm feeling pretty great right now because, I took yesterday as a day to just kind of flip the fingers to the markets and say, all right, this is a bit irrational. Let's try and get back to what makes sense. Let's be a little bit logical. So I did some research and, right now it's really hard to be a technical trader in a mania top. So you kind of have to resort to how the monetary system works. You also kind of have to resort to some of the narratives and news that are surrounding things and kind of pair that with how sentiment is across the board. And then you kind of use the technicals as the last resort, right? So that's pretty much what I've been doing. I did a lot of research yesterday, did some more research today, but I'm doing pretty good on this Friday. I'm not getting caught in the mania one bit.
Yeah, it wasn't the easiest decision to pull that trade off, to decide to make that trade yesterday, and this kind of just, I think this is a good opportunity for people who might be new to investing to kind of look at things a little bit differently, right? Like when yesterday was the most euphoric I've ever, like in my more than a decade of being involved in, actually way more than that, of being involved in the stock markets. Easily, I just remembered how old I am. Easily the most euphoric I've seen around one single stock. I mean, like I said, biggest single day move in the history of the stock market. That's fucking wild. You had Jim Cramer taking victory lap after victory lap after victory lap saying, oh, Jensen, you are my hero. I love you. I will suck your dick right on CNBC live. We don't sell Nvidia here. We only buy and hold. I mean, you can't fucking take that shit with you to the grave, buddy. So I don't know what you're talking about. But it just, every ounce of my being was like, I should take some profit here. Everyone is going through the fucking moon. People who don't really talk about stocks are tweeting about Nvidia, are making memes about Nvidia, are just, losing their minds around Nvidia. So it was like, today's the day. I got to do it. I've been holding this for so damn long. I will regret if it goes, like, to me, the downside potential is much higher. Like, how much higher? And maybe I'm crazy here. At a $2 trillion market cap, how much higher can this really go in the next 5 years? What is really the percentage upside that we have there versus what is the downside opportunity if the market goes in the direction that you and I think, with all the struggles we're seeing globally, with, a potential recession? And so I was like, all right, to me, I'm going to feel, if this continues to run, and I held a couple shares. If this continues to run and I sell, I'll be okay with it because I've locked in a great return. But if I don't sell here and this dumps down into the 400s, 300s, I'm going to be kicking myself so hard. So it was an easy decision for me. One I'm happy I made, despite it being up more today. I think we'll see a pullback eventually, because this chart, I mean, if you zoom out and you look at the 5-year on this thing, I mean, in less than 2 years from when it bottomed in October of 2022, and when I say bottom, I mean for this cycle, I mean, over 600%. That's crazy. In like 15 months. It's nuts.
I'm trying to pull up the 6 month, and it was just a straight line straight up. Hold on. This is we have to do 3 month. That's a 6 month. Let's do a 3 month. Maybe you get a little bit more. Oh, it's the same exact shit that I just had a second ago.
Let's go. Look at the month. Just look at the monthly. Just go to the monthly. I mean,
look at 3 decades. I mean, just flat.
Yeah.
Oh, that's the EMAs. Let me remove the EMAs.
I mean, if you look at from where we were in October of 2022 to where we are now, that's insane. Like, that is clearly not sustainable. And that is something that I'm okay selling at this point. Maybe I sold the top. Maybe I sold too early. Don't care. I think that there is going to be pain ahead. I think the AI bubble is coming eventually. And I think that this hype cannot last forever.
100%, man. I completely agree. And just to correct you,
wave counts. Yeah, go ahead.
Just to correct you, it's not Jim Cramer. It was Jim Creamer, because he was creaming all over CNBC about how excited he was. Taylor Jensen. The Taylor Swift.
It's just a buy. Just buy. Hit that buy button. You just keep buying, and you buy, and you buy, and you buy, and you hold. Like,
do you ever see? Do you ever see the Prom Child movies?
Oh yeah.
Remember when Gilbert Gottfried's like, yeah, you talk like this with your hands, and then the kid starts making fun of him? That's how I feel when I make fun of Jim Cramer doing his little buy. But yeah.
Prom Child was so good. You couldn't make those movies anymore these days. People get too outraged. Anyway, I don't want to get myself in trouble here.
All right. Anyways, yeah, so the Nvidia, like we were just talking about, sure, could have run up a little bit more. 100%, right? You know, I a lot of people, when I'm bearish on Nvidia, they think that I'm shorting Nvidia. I haven't fucking touched Nvidia with a 50-foot pole, right? This is one that I know that you just can't short. You kind of have to let it run its course. If you had Nvidia, wonderful. I'm happy for you, right? But you have to understand, there is no support down here. Like, I mean, even from back here, we shot up like $84 back in May, right before Memorial Day, and just shot straight up, and it kind of hasn't looked back since. There's a little bit of support down here in like the 400s. However, from where we are going and how much it's shooting up, it makes absolutely zero sense. Now, the other thing that I wanted to talk about is was it super microcomputer? I finally got it fucking right after practicing how many times I had to say that on the show. But this is the chart, and again, this is a funny chart because I did this the day before it dropped fucking 20%. I said where everyone's buying, and we got rejected right from it. And we're talking about leverage, which we'll get back to later in the show today. But I just want to show everyone this. This makes no sense whatsoever. So we had a day where it got rejected. February, it was a Friday before the market closed, dropped literally 20%. Then it was down, 2% the next day. The day after that, it was down another 6.7%. Day after that, up 32%. This is when Nvidia, the day after Nvidia reported earnings, right? So you're telling me a stock that was down 20-something% for 3 days shoots up 32%, almost 33% on another day because it's a different stock, a different company reported earnings, and they did well because someone else did well. That like the amount of just absolute like insanity that there is when you think about that, it makes no sense whatsoever. And now you're getting rejected once again where the fuckers were buying. So there's clearly a lot of resistance in this range right up here. And the reason I say this is because this is no different than if you look at, that Wall Street beat sheet where it's like, euphoria, where you have to just cool down a little bit and then you get the second pump. I think this is a bubble that is bursting 100%. Does it have to happen right now? Will some of these stocks burst before others? 100%. Really depends on a few things, but I just wanted to point that out. And there was another tweet I had right here. It was talking about, let me pull this up right here so everyone can see it. So the other day when the NASDAQ and S&P, so yesterday, was doing extremely well, this is actually what was going on across the board, though. Despite a face-ripping rally in indexes, 39% of the New York Stock Exchange closed red and 45% of the NASDAQ closed red. Is that sustainable? Right? There's very few stocks that are holding up this market. I saw today, Nvidia was the only one that was green. All the top 7 stocks were red. Look at the S&P, and the S&P is up 10 points, right? Does that make a lot of sense? No, there's a heavy weight to the S&P right now. And is that a good thing or a bad thing? Well, Nvidia is now a $2 trillion market cap, or it was this morning. I don't know where it is necessarily right now, but we talk about clearing.
1.96 at the moment. We're
Okay.
also as we're talking, everything is we're starting to see Nvidia give it back. We're the S&P is basically flat on the day now. Nasdaq is going lower. Everything's starting to go lower. Are people closing out and be like, you know what? I'm going to take my profit and sail off into the weekend, and maybe. But it's going to be, this final hour after such a volatile week should be a fun one.
And absolutely, I completely thought that probably would have happened, right? It would have been flat, or people would at least close some of their positions. The S&P, the indexes should close red or flat today, right? Maybe a little bit green. But the reason for that it's really getting interesting too is that with a true $2 trillion market cap at one point today, you have to think that this is getting worse for these market makers and clearinghouses. It's really easy to make a market when people are willing to buy, right? It's not really easy to make a market when people are willing to sell, because you got to find the sellers and the buyers, and there has to be supply and demand, and it has to meet up. We know that these reserves in these clearinghouses are not one-to-one. And the company like Nvidia keeps getting bigger and bigger, and currently sitting at the third largest company in the world right now, right? If I gave anyone a GPU, they wouldn't know what the fuck to do with it. But with the $2 trillion market cap, they don't have $2 trillion on hand. They might have trillions of dollars on hand, but they don't have $2 trillion on hand just for Nvidia itself. So if there's a broader sell-off in the equity market, that price is probably going to drop a lot faster than, say, something that's in the Russell 2000 or even a smaller cap index, right? So that's something that's really interesting. As this grows, this bubble gets worse and worse, and that's what causes it to pop a lot easier. So keep an eye on that. But yeah, that's just something that's been really interesting to me too. Like we're excited that this thing's getting bigger, but the bigger something gets, it's almost like that idea of too big to fail. You don't necessarily know that.
We've seen before that nothing is too big to fail. All right, we didn't really have a whole lot. There's nothing on the on the radar today as far as economic reports. Not too much from earnings. So the market has been heavily driven by what Nvidia reported and of yesterday as well. So let's talk about bonds, because let's throw the tinfoil hats on. We probably, if this is gonna become a recurring thing, we probably need like an intro for this. Kevin's
Aliens flying
tinfoil hat
around.
segment. Yeah. So go ahead. Let's hear about bonds. Let's hear about your conspiracy theories and what is going to drag the market into hell.
Absolutely. So this is just something I was thinking about yesterday, and Wednesday we had a huge auction in treasuries. Did anyone care? No, because we were all worried about Nvidia, right? So I'm just gonna pull this up. This is on what is this? Market Watch or Watch Market? What is this? Market Watch. Never mind. Treasuries, $16 billion auction for 20-year bonds produces very ugly results, trader says. Now, they were buying it earlier in the day, but they had a pretty good sell-off at the end. And there's a thing called the tail, which pretty much means that they go across, and the last person to pretty much bid on the treasury is what the rate everyone gets is. So if it takes a while for them to auction off all those treasuries, whatever the last rate is, because they have to offer a higher rate as people aren't willing to purchase it at a lower price, then they have to offer that to everyone. So it got pretty much to the point where the tail was really high up, and that's why we saw a lot of people dump in treasuries. We saw the yield curve also get further away from zero. There we go. Reverse Dutch auction of bonds, 100%. It's really shitty. How bad?
Stand the
I'm so glad I'm out of NFTs and I don't care about that anymore. Yeah, exactly. Chris, you pretty much explained it even better than I could have. I went too deep into it, but yes, it's 100% a reverse Dutch auction of bonds by interest rate. But so if knowing that, people weren't necessarily buying them at the lower rates, so the government had to continue to offer higher rates in order for them to get into, buy some of these bonds that they were auctioning. Now, why is that a problem? Well, it's been a problem for a long time. Janet Yellen's seen this as a problem. And we talk about there being a collateral shortage. Why is there a collateral shortage? Because no one wants to buy treasury bonds. No one wants to buy these T-bills, right? Everyone is piling into the equity market right now. Does that help the government? We live in a free market, right? We like to say that. We live in a free market that isn't rigged. And right now, everything is heavily, heavily weighted to equities, right? You could borrow from the bank right now, say 5.5%. Where are you going to put that money? You're not going to park it in treasury bills. No, why would you? Why are you going to? That makes no sense whatsoever. You're going to put it into something like Nvidia that's up 15% yesterday. Then you make the difference, and then you're pretty much in profit, right? But that also takes money away from the U.S. government that operates in a lot of these treasury bonds treasury bonds, treasury bills, and these bonds, right? And we know that there's a lot of not even companies, a lot of countries right now that are selling off a lot of their T-bills. China's been doing it, Japan's been doing it. It's getting to the point where it's hurting the United States, and the equity market's at all-time highs. All these other countries are at all-time highs, and I'm sure they're having the same exact problem in their country as well. With that being said, we know that the bank term funding program ends in March. And we always talk about, and it's even on the thumbnail today, when the leverage breaks, there will not be any chance that any of these stocks right now, when we look at super microcomputer, Nvidia's, anything that's had a parabolic run to the upside, that there's going to be any more money piling into those, right? Because once they know that there's going to be negative decline, people are going to go into the equity, take the money from equity markets and put it into the treasury markets to buy bonds in the bond market, I should say. I keep calling it treasury bonds, same shit almost. But looking at this, we know that there's a huge auction in April, right? It's going to be the largest ever bond auction to plug the budget deficit. It goes to show you how important these are going for the United States government right now. With bonds at all-time highs, rates still at 5.5%. And I don't think a lot of people are talking about this, but we do have to still deal with this, which is coming up fairly soon in March, along with the bank term funding program ending. It's another government shutdown, right? That's something that we've been kicking the can for a long time on this. So what I'm thinking, and this is just me spitballing here, is that the bank term funding program deliberately is ending in March with the equity markets at all-time highs. And that money, this capital that's in the equity market, is going to start to flow into the treasury and to treasuries and the bond market. And if that's the case, you're not going to see a positive return on a lot of these equities. You're going to see a lot of stocks go down. You might even see crypto go down. Does this kind of line up with the fact that banks are pretty much being constricted in a debt-based economy from issuing debt, the one thing that keeps the economy running? 100%. Now, with that being said, and we start to see equities pull back, are we going to start to see unemployment rise? Possibly. Could we start to see the yield curve uninvert? 100%. A lot of people, I think it was today, a huge amount of people piled into, what was it? Let me see if I can find it. A ton of people piled into the bond market. I think it was like $60 billion or something like that today for the longer term. They want to lock in those gains for a long period of time. Some people are going to want to have exposure to bonds for 10 to 20 years. Some people are going to want it for the shorter term. The reason why the yields are so high in the shorter term is because a lot of people don't have necessarily faith in the U.S. government, but it's enough to keep them operating to the point where they can pay those out. And a lot of people are just so euphoric on the equity market. So right now, I think that there is this kind of switch that's going to be coming. And it doesn't have to happen right away. It doesn't have to happen March 11th when the bank term funding program ends. I think it is going to come after the reverse repo also ends. But we're going to start to see a lot of the equities start to pull off. We're going to see them cut off, move into the bond markets. And then we're probably going to see a huge short squeeze in the bond markets. And the reason I think that this is probably likely to happen is because if we look at the yields on some of these things, well, it's kind of in a dangerous spot. Let's pull this up real quick. I know I'm talking about treasuries. It's not fun, but it is fun. What this could cause will be extremely fun for a lot of people, I guarantee you. So now we look at this, right? This has been what we've been watching for a while. We had a really good push down on the yields, which means people were buying the bonds. And then right around December 18th, we started pushing up again, meaning people were selling them off. People weren't buying them. We're getting pretty close to overbought once again on the weekly. I'd say in a matter of 1 or 2 weeks, we probably will be up there to the extremely overbought period. What happens in 2 weeks? Well, bank term funding program ends, right? So now you have the equity market at all-time highs. This thing's going to be extremely overbought on the weekly for the 10-year. If we look at the monthly, it's extremely oversold, but it can stay oversold for a period of time too. That's the thing that we're going to have to keep an eye on. And now we have rates at 5.5%. Now they're talking about raising rates once again. Does that work out? I don't necessarily know. It's going to be interesting to see how that plays out. But if across the board we look at the weekly on a lot of these yields, everything is getting close to overbought on the weekly. So at the very least, you're going to see a correction on the equity market. I'm not saying it's going to crash, but you are going to see a correction across the board because all these are getting extremely close to being overbought. If this plays out to the point where this bond auction that's coming in April, they need people to have money for it, it's probably going to be because people are going to sell off the equity market, and it's the easiest way for them to get that cash flow into the bond market so that they can operate. That's just one theory that I have. I think that's probably pretty likely to see that happen. Now, the other thing we have to keep in mind is we're at all-time highs, right? And a lot of people are saying that it's going to keep going up forever. Okay, just for reference, this is all the gaps that we have on the S&P, and we're up 45% or so from October lows of 2022. So it's had a really good run. Don't get me wrong. However, well, how is this different right now than where we were in 2008 versus 2000? I think it's pretty obvious when you look at this. You have 2000 over here in the blue, and we have 2008 over here. Obviously, this is the bottom or the first bottom, I believe, for 2008. Why do I have it? Monday, November 28th. I don't know. It's there, but this is when they started cutting rates back here in September of 2007. They pre-cut rates before the crash happened, and that's why we didn't see it was a slow crash. It lasted over a year. However, back here in November, I mean, it's probably easier if I look at the NASDAQ, you can see the crash that happened. And it was volatile and it was very fast. So here, you can see that in the first few weeks of the NASDAQ crash, how fast this was. I believe it was 40 something percent that the market dropped.
Ooh.
Yeah, 39%. And that was when MicroStrategy dropped, I don't know, 60% from Friday close to Monday open. So this money can move fast, but the difference is we're not in the 2008 scenario at all. I thought we were for a long time. We're not. We're looking at crashing from all-time highs. That's pretty much the base case of what I'm saying is going to happen. And I think that's what's likely to happen. And the only few times that we've crashed from all-time highs are in the dot-com bubble, which kind of makes sense with what's going on at Nvidia. And the other time, 1929. I'm not saying it's going to crash that big, but I'm saying that that's very possible, and it's very likely that we could crash from all-time highs because we have rates that are still extremely elevated. That means something probably is going to break in the system. We know that the commercial real estate is a huge problem. They talk about it in their Fed minutes. They said everything that was kind of bad and a risk for them is notable. They're focusing more on consumer prices. I don't know if that's necessarily what they're doing. If so, we do see some type of crash, and it has to come from the financial system, which is where all the leverage is coming from currently that is pushing these equities up. That tells me that pretty soon this might be getting ugly. So I'm just waiting to see what happens. I'm not saying that anything's going to happen soon. I do think that the top of the market will be put in soon once that the leverage starts coming out of the system. But for the most part right now, it's kind of where I stand. That's what all the research I did. I'm not getting caught up in the mania right now. I'm not going to fight the equity market, but I'm definitely looking at where money's going to be heading. I think it's going to be the bond market.
All right. A lot to digest on that one, but I think it's very well researched, very well said. You've steered me right many a times, Kevin. So I'm gonna believe you on this one. You were ahead of the FTX stuff. I got money out of FTX because of you before that. I'm going to continue to believe Binance too. You see, they got fined $4 billion. That was pretty fun.
Yeah, just a little early. I wish I could have written that with the zero.
Oh man, that would have been something for you. That's not a whole lot else to say on that note. Anything else that you think is worth discussing today? We're seeing crypto. We're just kind of chilling at the moment. Bitcoin right in that 51K range. We saw the Avalanche network went down for a little bit earlier today. So, the AVAX bros who make fun of Solana don't have a leg to stand on there. But what are you seeing in crypto? And we'll wrap up with that.
Absolutely. And again, nothing's really changed for me. I say this all the time because I'm calling bullshit on euphoria. I'm looking for what has happened in the past, what we can expect to happen if the monetary system functions the way that it does. And, like I said, we're a debt-based economy where debt is not being issued right now. It's going to cause problems regardless, right? If the basis for how the economy works is not working the way as it should, then things are definitely going to fall apart. But right here, we're looking at the ETF, and I'm looking at this on the daily, Bitcoin being at around 51,000. If we even zoom in here, what the hell is going on here, right, guys? This price is just being stupid, just sideways. This has not been fun one bit for Bitcoin. You can see that dominance has dropped a little bit. You can see that some of the alts have pulled back significantly. The thing is, I'm somewhat concerned about is that Tether is still printing, right? It's another $1 billion this morning. I sent that to you in house. And again, on the Tron network, and you see that Paulo is also, acknowledges it and acts like it's not something that's problematic. I don't think that any of that money that was pumped between here in October to where we currently are, maybe a little bit less, has been organic by any means. I think definitely some of it has, but for the most part, that's still been very questionable. If you look across the equities, I mean, across Bitcoin, though, I mean, sure, we're getting close to oversold on the daily. If we look at the 3-day, you can still see that we're extremely overbought, right? So the daily is moving a little faster than maybe some of the other time frames, which tells me that there might be one last little push to the upside. The weekly is probably going to be close to overbought fairly soon, and you can see that it rebounded from oversold very soon, very fast from the ETF news. So seems like Bitcoin wants to stay here, but the problem with it being up here, it reminds me of that Wyckoff distribution pattern, and I think that this is just our last pump before we start to see some pullback. I'm looking at like 46.5K. That's kind of a range that I am watching. I don't necessarily know if it's going to happen anytime soon, but it'd be a lot of support that's right here and a little bit of support that's down here too. I think that we could pull back here, maybe retest something, maybe this one again. But if we decide to dump real fast, given something happens in March or something happens before the halving, which is likely to happen because we're still waiting for that 40% drop. I mean, some people are saying that we already had that, but I'm not convinced that this little 21% drop that we got from the ETF news lines up with what we've seen in the past. So we'll just have to wait and see how that plays out. Across the board, though, we saw that ETH also hit $3,000. We talked about that a few days ago. You saw that Reddit kind of announced that they were buying Matic, Bitcoin, and Ethereum. They shot up once again. So again, we're kind of just buying because we think that someone else is buying here in the crypto market. On the daily, you can see this is extremely overbought. But once again, the macro outlook for a lot of these things are still playing out that we need a correction, right? I said that this is our B wave. This is wave A, B, C within the B wave. We need a C wave to the downside. And you can see that the last time that this was extremely overbought for Ethereum was pretty close to the top. It wasn't the top, but it was pretty close to the top. And, we're overbought once again, and we're nowhere near where we were for either of those two events. So it's going to be interesting to see how this plays out. I'm not necessarily convinced that we're going to be seeing a massive rally. Maybe in alts, there could be if they continue pumping more money into them. But for the most part, everything's kind of playing out to the same patterns. Look, extremely overbought for Solana, first time since, roughly around October of 2021. Let's see, Link, see how that's doing. Extremely overbought, but on the monthly, but look where we are compared to where we once were. So we can see that a lot of capital isn't necessarily still flowing into crypto. Overbought once again on the monthly. XRP, coming out of the overbought territory, but still nowhere near where it once was. I mean, this thing at one point was a lot higher. I think it was at like $4 at one point. So it's really interesting to see that across the alt market. Yeah, if we look at this on the macro, still possible we could get little pumps to the upside. I think there is going to be one more alt pump considering how Bitcoin dominance is falling a bit here, especially on the daily. Yeah, Bitcoin dominance has been dropping. This could allow for another pump to the upside, but I'm not getting too convinced and caught up in it. Coinbase stock, we'll say this though, pulling back pretty good today, down 3.5%. Still think that this one's going to start to move to the downside. The earnings are out of the way. We're not going to get Q2 earnings or Q1 earnings until probably like April, May. So maybe that's when we start to see some things kind of change. But for the most part, everything out of Coinbase is going to be reflecting what Bitcoin's price does, I think, for the foreseeable future. So maybe a little bit of pump here, but we didn't pass that 208 level. That was the level that we were talking about. We got rejected right around what is this? What was the height? 193, and it went straight back down. So definitely enough resistance there to the point where this didn't invalidate this pattern. So as crazy as it sounds, I'm still bearish on Coinbase to the point where I think we are going to see new lows. And that kind of coincides with the fact that I think we need to see new lows on those macro structures for, Bitcoin, Ethereum, and a lot of other alts. So that's pretty much what I see with the alt market. I'm not looking at funding rates. You should take a look at that at some point, maybe Monday. I'm not trading this fucking market right now. I'm doing less. I'm buying bonds. I'm buying fucking bonds at this point. The TLT had a good day today. It's shot up a good amount. But I do want to share one last thing. These are some of the tweets that I've liked that are just stupid. This is my stupid tweet of the day. Hold on, let me just cancel this.
It's got to be a good one.
I think it's just ignorance. I think ignorance is the best word for it. And it's everything that's going on. Germany in a recession, Japan in a recession, U.S. facing coming recession, yield curve, all stock markets on all-time highs. Go macro analysis. I think we're just getting a little too euphoric here. And the reason I bring this up is because I've seen a lot of these where it's just like the macro doesn't matter. Monetary system does. No one ever accused traders of being intelligent. I'm sorry. It's the truth. No one will ever will. People in the equity market don't understand a lot of the other markets. They don't understand the bond market. And certainly they don't understand the euro dollar or how the monetary system functions in a debt-based economy. So that's just something to be said. And that's kind of the stance I'm having right here. And that's why I said you have to do research outside of just technical analysis. That's my not even my base case right now. It's my last resort. But looking down at this here, to be simple and balanced, it's FOMO on the AI hype. Look at the stocks running to push the banks are in the same game too. JP Morgan leading to new highs, but the rest is thin. Be wary of false narratives. I think we're going to see that bite some people in the ass moving forward if we believe that we're going to see all-time highs at the all-time highs. Just something to keep in mind.
Everything just keeps going up forever until it doesn't. That is why just continue to be patient. Look for opportunities to acquire more assets at good prices, all of that jazz. Appreciate you, everybody, for joining us today. Chris, Randy, for being here with us live. Anyone else who popped in, thank you very much. If you have not yet, hit that like button, subscribe to the channel, drop some comments. We'll be back next week. Should be an interesting week in the markets. Earnings season behind us. Economic data will begin to roll back in ahead of the March FOMC, so we'll get to speculate there. Markets are giving back some of those gains today. I think that might continue into next week. So the euphoria. So at some point, the song is going to come to an end. But for now,
let's say this.
We appreciate
Let's say
it.
this. In the next 25 trading days, the market top will have been in. I might be wrong, but let's just say that. That'll be my little conviction bet at the end.
Okay, so we got in the next 25, including starting next week. So we got 5 more
days.
weeks.
Yeah. Not like Saturday, Sunday bullshit.
Yeah. All right. So basically by the end of March, the top will have been put in.
That's my conviction, but I could be wrong, but I don't care. I have balls of steel right now.
You see these hands? These are diamond hands. All right. That's going to wrap it up. Appreciate everybody for joining us today. Have a great weekend. You see these meaty clackers right here. Have a great one, everybody. Love you guys. We'll see you next time.
Take care, everyone. No.